So traders, we know that that the interest rates are going to start. They're going to start to pause interest rates soon, right? And we also do know that they're going to start to cut interest rates soon. And we also do know that we're probably heading into a recession. And we don't know exactly how big the recession is going to be. But I want to share some things with you of how we can actually play and actually benefit financially from this rate pausing, cutting, and then obviously the QE that's coming as well too. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so one of the things that I'm always doing myself is, firstly guys, when I'm trading the markets, okay, when I'm actually trading the markets, I'm never guessing. Okay, so if I ever do a market update for you, I say, look, this is what the Dow Jones doing, this is what this guy's doing, and and so on and so forth. That's just giving my opinion and my view of what the market's doing. That's not how I trade the markets. In that trading course, link in the description, I give you my trading course. Okay, plus also I teach you about chart reading techniques. In fact, one of the chart reading techniques I teach you has been working since the 1950s. In that, and again, it's all for free. Link in the description. But the purpose of me telling you that is that, one, when I'm trading the markets for income, I'm getting in, I'm getting out, so on and so forth. I'm never guessing. Okay, a big mistake that I'm seeing with you guys is you're guessing. But when it comes to my, but there are opportunities out there, right? What I see from say now through the rest of this decade, and when I say that is like what's likely to unfold this decade, but then also probably what's likely to happen. I'm always likely to see shifts on what's likely to happen over the next couple of years, right? And how do I actually benefit from that? How do I actually benefit from the shift that is actually taking place? So let's have a look at this here. So for example, if I look at the interest rates, right? So we got the 2 year. I honestly believe the 2 year. This is the 2 year here. I honestly believe the 2 year is now peaking out, and we're going to start to head down. Now, guys, leave a comment below. I actually believe the long-term interest rates, the 20 year, or 2 year, 30 year, and 10 year, possibly even topping out here, and we're going to start to see them come back down. Now, is that the Fed doing that secretly? Who knows, right? But the thing is that if this comes down, is that going to be bullish for the overall stock market? Right? Is that going to be bullish for the overall stock market? So leave a comment below, guys. Let me know what you think about what's going on right there with that. But the big thing I really want to focus on with today's video is how do we actually play what's happening over the next couple of years? What's going to happen in the next couple of years? The Fed's going to pause, pivot, cut, and then also those longer term rates are going to start to come down as they do QE, or maybe they're already starting to do that with the printing of money they're doing right now, right? So as these long term rates over the next 1 to 2 years, as these long term rates start to come down, right? And we start to see these things start to head back down, then how do we actually benefit from that shift taking place of the markets? And how we do that is we can do two different things, right? So as they start to pause and cut, and then they start to do QE again, maybe they already started, all right? There's a debatable question there, but if they definitely come out and do another round of QE, right? What's going to happen is obviously they're going to bring the long-term interest rates down. How do we actually benefit from that? There's two different markets, right? Firstly, you got the TLT, just straight out TLT market. And so what is that? The TLT market is indeed obviously the 20 year, the 20 year bond market, right? Or the 20 year bond market. So obviously as interest rates go down over the next 1 to 2 years, what's going to happen to TLT? Right? We can start to see what? We start to see a movement back to the upside, right? So that's the first thing I do say is that there's that one big shift. There's a fundamental shift happening with the interest rates that is pretty much virtually guaranteed to happen, right? Especially when we go into the thick of the recession and they really start to bring the long-term rates down, guess what's going to happen to TLT? Now, one that I am actually in myself is the TMF market. This is the TMF. This is obviously the leveraged, three-time leveraged. So one thing I'm looking at here when it comes to the TMF market, right, and we can see through here, is that we can see that especially when they go through another round of QE, what's going to happen to TMF, right? What's going to happen to it? We're going to see what? We're going to see an enormous move to the upside, or maybe not an enormous move to the upside. We're probably going to see a move back up to say 2020, right? So we got that through there. So one thing I do see happening through here is as the interest rates start to come down, this is probably going to start to rise up through here. So this is one of the markets that I'm positioned in right now, and I am benefiting from that. I'm benefiting from this position here as the interest rates start to move, right? So one thing that I'm always doing with my investing portfolio is that I'm just trying to see where's the puck going, right? I'm not trying to say, because a lot of people are like, oh, I want to get back into crypto because crypto is going to have another boom. Are you sure? Are you sure? Right? Because it's like, I don't want to be trading are you sure bets, right? I want to be trading like there's a massive probability of this happening, right? There's a massive probability, it's almost a certainty, right, that they're going to pause, cut, QE, bring the long-term rates down. What's that going to do to the bond market? You see what I'm saying there, right? Like, I don't want to be guessing. A lot of people are like, well, I'm going to get in now because I hope this is going to happen. Right? I hope we see this big bull market again. So therefore, you're on the what? You're on the hope-mania again. And so therefore, I don't want you to be doing that. Okay, it's like, and a lot of people, and the big mistake, people's like, oh, because Bitcoin had a big boom and big bust, I know it's going to go through another boom, so I'm going to get in early. It's like, why would you go after something that's already had a boom and bust period? Right? Why not go after something that's a bit more sensible, like say the long-term rates? Right? And as an example here. Now, obviously, guys, anything can happen, right? Like, who knows? Something could happen where the Fed just keeps doing something silly, and then they and the long-term rates just keep going sky high. We don't know what's going to happen, so it's obviously no guarantees here, right? But I'm really confident in seeing the pause, then the pivot, and then the cut. And then obviously the QE, when that happens, they're going to bring the long-term rates down. And to me, that's going to be a sign of things changing, and then therefore we should start to see the bond market, the TLT, TMF start to have a rise as well.